You're watching Bit the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Ibn Mabunda, and we're coming to you from our ZTN studios in Zimbabwe's capital, Harare. Coming up on Bit the Market, ZSE-listed property firm Mashonaland Holdings Limited experienced a record-breaking surge in profit after tax during the first half of 2023, coming through 236 billion in the 6 months to June 30, against a prior performance of 7.7 billion Zimbabwe dollars. The growth was attributed to improved operational profitability and substantial capital gains recorded on investment properties. The group has interests spread across residential, commercial, and industrial property and is pursuing a property diversification strategy. We speak to Gibson Mapfidza, the managing director, as well as the CFO, Kudakwashe Musundire. But the market to be right back. Don't go anywhere. You are watching Bit the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Ibn Mabunda, and we're broadcasting to you from our ZTN studios in Zimbabwe's capital, Harare. Now, today we discuss the financial performance of Mashonaland Holdings for their half year ended June 30, 2023. We also look at other pertinent issues with regards to their operations, of course, here in Zimbabwe. And I'm joined now by Gibson Mapfidza, the managing director of Mash Holdings, as well as Kudakwashe Musundire, to unpack their numbers and strategic focus. Kuda, of course, being the CFO, the Chief Finance Officer. Hello, gentlemen, and welcome to Bit the Market.
Thank you, Eben, for having us.
Thank you very much for having us.
Fantastic. Kuda, the revenue grew 150% to $8.7 billion in the 6 months to June 30. What were the major drivers of that performance?
Thanks, Eben. As you note, the results that you've presented are inflation adjusted. So what that tries to do is to even out and ensure that we've got a uniform comparison on our performance. So there are two aspects to our performance. We earn our revenue from selling space. You do know that we are a property company that invests in space. We provide space to our markets, and also we've got capital projects that we are currently doing, which capital projects played a major part in our performance for the half year. So getting into the numbers, the 150% increase in our revenue performance was buttressed by an improvement in our lettings. First of all, our lettings improved from 83% last year at the end of last year to close at 87% as of June. So that performance trickled through and had a positive impact on our rentals, which increased by 115%. Also included in our revenue, which we recorded, is income which we earned from the Marshview Gardens project, which we are currently doing. This is a residential project which we are doing, comprising of 25 cluster houses in Bluffview. This project is fully sold, so we earned revenue of 1.2 billion, and this also contributed to our revenue performances at 30 June.
Right. Gibson, the rental income grew 115%, as he articulated, on the back of increased occupancy. Would you want to shed more light in terms of what this means for Mash Holdings and how important the element of occupancy is to your operations?
Okay, thank you very much, Eben, for that. So occupancy is one of the key metrics that you would measure for a typical property company like ours, because it talks to how you are able to fill in your buildings, and also, more importantly, how are you able to collect them as well. But the significance of that rental growth for us, I think one is to say, you see, we are operating in a hyperinflationary environment, and you want to ensure that your property investment is hedging against this inflation. So that helps in that regard. But also, when you look at our strategy in terms of diversification, we want to try by all means to use resources generated internally. So by growing our occupancies and intend revenue, it enables the company to also deploy those internally generated resources towards diversification or property development as well.
Right, over to you, Kuda. Your foreign currency revenues dominated your top line, accounting for 74% of these revenues. How significant is the contribution of the USD to your performance as well as your operations?
Thanks, Eben, for that question. As you know, Zimbabwe has been a hyperinflationary economy for quite some time. So for you to, as a property company, to protect returns, and to secure that return to your investors, to your shareholders, it is very important that you earn and retain your earnings, your rentals in a stable currency. So through engagements with our tenants, in some cases headhunting, we've been able to gradually improve the contribution of foreign currency to the top line performance, contribution to the top line. We started off at around 54% at the start of the year, and that number grew significantly to 74% as you recorded. This is important because what it does is it allows us and creates free cash flows which we require to support our projects. I'm sure as you go through the performance and unpack the performance, you will find that we've got quite substantial capital investment projects which we are doing. So for us to be able to do those sustainably, we require to generate meaningful cash flows, which in foreign currency will support those capital development projects.
Now, 26% of your revenues come in the form of Zimbabwean dollars. Yeah. And between May and June, the Zimbabwe dollar depreciated by over 65% against the United States dollar, bringing some degree of complexity, I believe. Now, we look at your group's collections that came in at 94%. How crucial is that for your credit management against the backdrop of the volatility?
Mm-hmm. So thanks for that, Eben. So yes, it means we have 26%, which is still in Zim dollar denominated rentals. Our 94, so we started with occupancy levels 87%. So it's crucial that once we sell the space, we are able to collect. So 94% for us, I think when you then compare across the market and also looking at the general state of our tenants in terms of even them struggling as well, I think it's a fair number. Ideally, in this environment, we would want to achieve 100%. But what it also means in terms of significance of 94% collections on a monthly basis, on average at half year, it ensures that we receive those rentals on time and be able to use them at a better value given also inflation. So in terms of credit management, I think what we have really tried to do very well is our onboarding of new tenants. We make sure that we screen them, we take them through a vetting process, which is done independent or outside of the organization, so that we get on board tenants who are also able to meet their obligations. We are meeting ours in terms of providing the space in a good state, and we would also want them to pay. So we go through all that process. What it then means is going forward, you know that the tenant is able to do it. It then becomes a matter of customer management to ensure that they see value from the premises they are listing, and them seeing value means they are also operating a viable business and they are able to pay rentals. So yes, credit management, but it really starts from onboarding or from leasing, and going forward it becomes more of a relationship. Turnaround times in terms of dealing with their queries, it then enables them also to see value in paying rentals and also sustaining that relationship.
Right. Now, let's interrogate the figures a little bit in terms of the profit. You reported an operating profit of 34 billion Zimbabwe dollars, increasing 800%. And for the sake of our viewers, this is before we look at valuations as well as foreign currency gains. How important is this, and what drove this particular performance?
Okay, thanks, Eben. Following on from your previous question, if we're to consider our performance in USD terms, what we find is that we closed the year with a USD equivalent performance of 3.1 million, up from 1.9 million in the previous year. So there is a real growth in terms of the absolute numbers, that is at revenue performance level. So we've seen that growth trickling through, and has led to us holding more liquid resources as at June. So with the depreciation in the Zimbabwe dollar, I think you have previously mentioned that the Zimbabwe dollar depreciated by over 700%. This creates a situation where you revalue your liquid resources, and this has had a positive impact in terms of our operating profit. But if I was to answer you briefly, it's largely as a result of that improvement in operating profit, revenue performance improved in our leasing, as well as the depreciation in the currency coming through with a positive impact.
Right, and of course, closely linked to that would be your bottom line, the profit after tax, which came in at 236 billion Zimbabwean dollars in the 6-month period, from 7 billion in the comparative period of 2022. Now, given that fair value adjustments came in at 244 billion Zimbabwean dollars, can you tell us about the revaluations and their significance to your performance?
Okay, thanks for that question, Eben. So indeed, we saw an uplift, capital uplift in our investment properties, 117%. If we were to analyze our performance, we spoke about the improvement in our revenue performance, closely linked, the 117% growth. You can see it is mirrored in the improvement in the rental income of 115%. Valuations are done. We do valuations in line with international financial reporting standards, as well as in line with the international valuation standards. So that process led to us recording fair value gains on our investment properties. But also important, I think, which Gibson will speak to, is an improvement. If we were to look at our portfolio in USD terms, we did see also that same improvement in our portfolio coming through on the USD valuations for our portfolio.
I cannot help but ask Gibson, how exactly do you come up with these valuations? Because I'm looking at 244 billion Zimbabwe dollars, and that's the fair value gains recorded in terms of your property portfolio. How do you come up with these figures? Do you just throw them in there, or how exactly does it work?
Interesting. I hope I don't take you back to school. But essentially, so as a market, as Zimbabwe, we are operating in terms of valuations. We call it abnormal uncertainty. The environment that you're operating in, it makes it very difficult to estimate values or selling prices of assets. But in terms of how the methodology we are using across the market is called the investment method. And in summary, we use the direct income valuation capitalization method. Essentially, what it says is you have an asset, it produces cash flows. There is a relationship between the income value of that asset and the capital value of the asset. So what the method does is you are capitalizing, or you are converting the rentals you are getting from a property, and then say the estimated economic life of this property is maybe 60 years. So you then capitalize your income to come up with the capital value. When you look at, so what are the inputs? The two key inputs is the rental income on a monthly basis, which you then annualize. Then the other input is the factor you use to capitalize the rental income to a capital value. We call it a capitalization rate. So those are the two factors. Now, when you look at the movement of numbers from close of year 2022 up to half year, which is 450 billion, it reflects the movement of rentals. So what we have done in this market, not just us, across the market, is if you agree a rent with a tenant in Zim dollar, our 26%, we have reduced the rental term to as short as 1 month. So what it means is on a monthly basis, we are meeting with the tenant and renegotiating the rental based on the market developments as well. What are we trying to do? So one key attribute of property is it hedges against inflation. How does it do it? Because property is the only investment where you actually negotiate the income inflow. You can't do that for equities and bonds. You get what you get. What you get is what you get. But in terms of rentals, you are able to re-engage with your tenant, and based on what is happening in the market, renegotiate. So the increase in property values is a direct reflection in terms of the rental growth as well. So when you look at how rentals have grown and also the capital value, there is a relationship between the two. But I would say the capitalization rates have been static in this market, but what is really influencing or driving this increase is mainly the rental growth. So rentals are growing mainly in Zim dollar terms. But when you look at US dollars, they have also been growing, but maybe not at the same rate. But in terms of valuation, what we have also done, and for management purposes, we do our valuations in Zim dollar for purposes of financial reporting for Kuda. But in the background, we build the Chinese war and also do valuations in Zim dollars. So for us, you look at the growth in Zim dollars, it may not make sense, but I can confirm that our portfolio from December last year to June this year grew in US dollar terms by 5%, from 77 million US dollars to 81 million US dollars. So this really talks to also the rental growth in terms of in US dollar terms as well.
Right. Time for us to take a breather. After the break, we'll look at the strategic focus of for Mashonaland Holdings Limited. Don't go away, but the market will be right back.
Give every morning the smart start it deserves with your favorite homegrown breakfast cereal. Nestle Ceravita. Fortified with Grain Smart, a smart combination of ions, vitamins and minerals. Your family gets all the energy they need to make the most of every day. That's why every morning deserves a smart start. Nestle Ceravita. Highly nutritious, simply delicious.
Hello and welcome to The Mint. I'm Andy Hodges. This is ZTN Prime broadcasting to you.
So when COVID came,
Welcome back. You're watching The Mint live on ZTN Prime. I'm Eben Mabunda. You are watching Bit the Market on ZTN Prime, broadcasting to you from our ZTN studios in Zimbabwe's capital, Harare. I'm Eben Mabunda. I'm with Gibson Mafidza, who is the managing director at Mashonaland Holdings, who is also flanked by Kudakwashe Musundire, the chief finance officer. Now, gentlemen, moving forward from where we left before the break, your operations over the past few years have reflected a shift toward portfolio diversification. What has steered a move in this particular direction? Gibson, it's been something that you have been upbeat about at almost every analyst briefing that you've had, and you've made sure that you highlight that even at your AGMs. May you speak to that?
Okay. So when you look at diversification, it's one of our key focus areas, key strategic pillars going forward as well. And like you've said, we have spoken about this, I think, from as far back as 2018. When you look at the March portfolio, there was a lot of concentration in the CBD. But over and above the concentration, when you look at some of the buildings in terms of their age and also their design, they were no longer talking to the needs of the current customer. ICT is coming through, fourth industrial revolution, and the need to connect the building, to make a building a living organism. So what we did in 2018, we looked at the rest of our portfolio, and we looked at our properties in terms of performance. There were certain assets which had gone beyond their economic effective life, and already there were liability in the portfolio. We then also did a research across markets in terms of engaging with corporates to understand their growth areas. Where do they want to go? What are they looking for? So what steered our diversification, or what informed it, was to look at our portfolio and say, as a product, is this still talking to the customer need? We realized we needed to change our value proposition, because that value proposition to customers was talking to 1990 customers in terms of these high-rise buildings, a full floor, etc. So we then had to look at the market in terms of where our opportunities, and also in line with where some of our customers, who are tenants, wants to go. So it was a mix of that research. What we also added to that was to look at our shareholders. Who are they? What do they look for? They want dividends twice a year, meaning that we needed to go in properties which are generally considered liquid in terms of generating rental income on a regular basis. So we then looked at our portfolio, We developed a pie chart to see which segment we're invested in. We then developed what we call a model property portfolio. Our intention is to achieve it by 2027. We allowed ourselves 5 years. Why 5 years? People may ask. Because property, unlike equities, you need to actually acquire a site, go do town planning, bring in contractors and build for us to achieve. So the journey from current portfolio to the desired is a real journey in terms of what you need to do. So in certain cases we had to dispose, we disposed Charterhouse. In certain cases we had to acquire new sites, like we acquired a site in Westgate where we are doing cluster houses. We did the same in Milton Park where we are doing a day hospital. Same with Pomona where we did the groundbreaking you spoke about.
Right. Just to jump in there,
Yeah.
I need you to speak to that Pomona commercial center where it is that you've got investment of $15 million with a completion date of 15 months to the fourth quarter of 2024. What are the highlights of that project?
Okay, so the key highlights, one was to respond to market needs on behalf of our customer. So Matt is going to be the anchor tenant there, and they are looking at Pomona as a node around Harare, which is emerging, which we also concurred to. So when you look at the concept, it provides total is 14,000 square meters, 8,000 of it is a block of Matt. Chop Chop will also be part of that block. Then the other block, 6,000 square meters, is what we call modern and flexible warehouses. What are we trying to do? We realize that in the developed countries, in fact, it's coming to Zimbabwe. South Africa is already there. There is development or emergence of online shopping. Online shopping needs warehouses that are closer to the residential areas. So we have 6,000 square meters of what we are calling flexible warehouse units in 1,000, 1,000, 1,000. So the concept, we have that Matt, which is wholesaling, stroke retail, and the flexible warehouses. As you have said, our duration is 15 months. We are on course. The contractors are already on site. We are busy excavating to reduce levels before we do foundations. And our target for this year is to make sure that when the rains come, we reach peak rains, say around mid-December. We have done all the substructure works. And when we open early next year, we are ready to move on with the superstructure towards the roof as well.
Now, Kuda, what sort of value are you looking to gain or glean from this as well as other projects, if you may?
Thanks, Eben. So, like what Gibson spoke to, what we're looking to do is to rebalance our portfolio, and with that, it follows that we will reduce the risk that comes with our portfolio, the earnings risk that comes with our portfolio. We're trying to beat that volatility in the portfolio that will stem from changing tastes in our in the market needs. So the projects that we've been investing into all beat our cost of capital. We've got a model that tries to determine the cost of capital as we go into each project. Gibson spoke about the hospital that we are developing. We are looking at an entry yield of 7% on that development. The Pomona Commercial Center project, an exciting project that's coming up, spoke about as well. We're looking at a return of around 9%. So these are all returns that will ultimately feed through in terms of us hardening our earnings as well as offering more value to our shareholders.
Now, back to the subject of diversification. The Milton Day Hospital is at, the Millpark Day Hospital rather, is a 90% completion according to your results. Marshfield Gardens is substantially complete. How important are these projects to your portfolio? Briefly.
Okay, so when you look at the Day Hospital, it's a hospital. We already have 2% healthy within our portfolio. We want to grow it to 6%. And the Milton Park, I think, will leave us at 5%. How significant? When you look at hospitals, the returns are very much defensive. The rental growth may not be very high, but you're assured of your return. So in a way, it diversifies our portfolio in terms of the segment that we want to operate in, and it also grows. Our health segment. Then Marshfield Gardens is really residential, but we are selling the completed units. So what it does there, we are chasing the margin, which is the difference between your total development cost, including land, construction, and the eventual selling price. And very happy and excited that we achieved a developer's profit margin on Marshfield Gardens of 22%. Very compelling. And we are looking, what it then means is it really aids in terms of diversifying our revenue streams. If you look at 2019, going backwards, 100% of our revenue was coming from rentals. And going forward, we have said development side of the business should contribute at least 15% on an annual basis. So you see that Marshview Gardens for the 2 years, 2022, 2023, is significantly contributing. We are already starting working on another project, which is cluster houses. We sell them for, which is also going to contribute in 2024 and 2025. So that going forward, we maintain that sustainability in terms of contribution towards revenue from the development side of the business.
At some point, you were pursuing land in Victoria Falls. May you speak to that?
Yes, Victoria Falls has been, in terms of geographical diversification, has been a market that we would want to set our footprint in. I would say we are very close to getting this land now. I know it's been long, over 3 years, but Kuda can confirm we have all the necessary approvals, board approvals. We also have an operator in Dubai. Very pleased to say our operator yesterday hosted the ambassador of Zimbabwe in UAE, the ZTA CEO, and also the whole team that is attending UAE. They hosted them at their hotel in Dubai. These guys were very pleased, and they managed to get updates in terms of where we are securing land in Victoria Falls. So we already have a partner. So when you look at our developments, we have moved away from speculative development to a situation where we identify the tenant. So in this case, we have identified the operator and we are moving along with them.
Right. Kuda, you declared a dividend, an interim dividend that is denominated in both US dollars and Zimbabwe dollars. In 1 minute, may you speak to the significance of that and against the backdrop, of course, of your performance?
Okay, thanks, Eben. So what we've tried to do is to use the same model. We are earning our revenue at the moment mostly in United States dollars. So we've declared an interim dividend of 128,000 United States dollars. The Zimbabwe dollar component amounting to 258 million. We hope to be able to pay that. In fact, we should be able to pay that in the next few weeks. What that has done, I think I've been looking at the share price. We've seen a positive improvement, which means that our shareholders must be pleased with our performance. And it follows, I think it's also reflected in our ratios as well. Our return on investment almost doubled, now at 53% from 26% last year.
Now, lastly, Gibson, when you look at the property trends in Zimbabwe, what are some of those key elements and how are you looking to sail on those strategically for the business?
Okay, so quickly we see densification of formerly low density areas into cluster houses. We are already operating in that. We also see preference into alternative real estate, student accommodation, hotels, health. Happy to say we are also already playing into those areas. What worries us is we see non-traditional property players coming into this market, essentially to hedge against inflation. It eats into our margins. How are we going to respond? We need to be very close to our customers. When we sign up to say we're going to deliver this clinic within 14 months, it has to be 14 months. By so doing, we are able to compete with these other non-traditional property investors who are really claiming to come into the industry and also affecting our margins.
Well, that's a wrap on Beat the Market this afternoon. I'd like to thank my guests, Kudakwasha Musundire, as well as Gibson Mapfidza, the CFO and MD of Mash Holdings, respectively. I'd like to thank the team behind the scenes for their continued contribution. Thank you as well to our viewers for watching. Do follow us on our social media handles at Zimpapers TV Network as well as at ZTN Prime. Do catch us every weekday at 2 p.m. Central African Time for the juiciest business stories in Zimbabwe, on the continent and beyond. I'm Eben Mabunda, the Money Man. Let them do what they do. When we do what we do, we mean business. Once again, thank you for watching and have a good day.
Welcome to Chew On, the show that links people, food and culture whilst giving you a diverse culinary experience.
Pure ingredients, wholesome, vibrant and earthy dishes. When you get all the elements together, it all